Both Meta and Microsoft crush earnings, and the initial move is up after the close. We'll see if that continues as I do the video. I'll keep an eye on it and update you guys. As usual, this is going to be the greatest video ever. You have no idea the things we're doing behind the scenes, who we're talking to, what we're doing. It's just amazing what you're going to see. So stick around. It's going to be an unbelievable video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Wednesday on this unbelievable day. To be honest, it is an unbelievable day. Today, my son's going to get an award at school. I'm really excited about it. He is a much better student than I ever was, so I'm really proud of him. He doesn't really watch the videos, but maybe one day he'll see this and recognize how proud of him I am. Something for his grades. He does really well. He does a lot of work. I was a bit of a slacker, and it is what it is. So it's nice to see him kind of do his work, gets good grades, and he hustles. He's actually got accepted to a really good high school as well. Now, that being said, both Meta and Microsoft clobbered the earnings. As always, this is not financial advice. Please don't listen to me for any financial decisions you make. Reach out to your financial advisor as well as doing your own research. In fact, I would recommend not listening to anybody on YouTube for making these decisions. It's really important that you get your own finances in order and organized to match what you need to invest in. It's just nice to see the markets rallying at the end of the day today as well as after the close. It's kind of what I expect from Amazon as well. It feels like the earnings are going to continue to beat. So despite the news, despite the fear, and we're climbing a wall of worry, the companies continue to issue earnings that outperform what's expected. At least with Google, it rallied right after the earnings, but then it seemed to drift back down. I still feel like in the end, earnings are going to be what determines where the market goes. And if we continue to beat, well, the prices are going to continue to go higher. I still have concerns that we're going to go into a recession, that we've hurt our relationships, all the things that we hear in the news. But part of me thinks those are just the fears because the news keeps talking about it. It even got me scared near the bottoms. But fortunately, it's why I have a set it and forget it account and just stick with the plan and continue to watch. So I took a quick look, and it looks like Meta did over $1 billion higher in revenue than was expected by FactSet, which is pretty awesome. I mean, that's 5% higher than what was expected, which is a real beat for a company that's a behemoth like they are. It's not a tiny bit, it's significant. The one thing I did hear is they're going to continue to spend more in their CapEx. I don't know how I feel about that, and as the market digests all of it and gets to go through it, we'll see what happens. At least right now, it's trading above 500. The other thing that happened recently is I kind of got into it with somebody who I actually like out here, but on his YouTube channel. He does real estate and he talks about things, and nothing about his actual video, just something in the comments when we were chatting back and forth. Came up about Jerome Powell. And look, just to get things off the bat, I think Jerome Powell is excellent at what he does. I think that we're lucky to have him the same way I felt about Bernanke. And I think they're doing the best they can in a really tough economy with a lot of things going on. But one of the things that we kind of got into it about is, A, he recognized that they have a lot of data that they probably don't even share with us. And then he made all these references essentially saying how they should make anticipations to move the rates before the data comes out. And I'm thinking, well, you recognize that they have information at their hands that they may not share with us. They also have something like over 2,000 economists on staff, as well as the Fed chair himself, as well as the people on the board. And I don't think they're a bunch of morons just making bad decisions. I think it becomes very easy to point at Jerome Powell and blame him for a lot of things, which is what I think people like to do. But I also compared it to pointing at a ship captain and blaming them for the weather. Like, they have all things at their disposal that make guesses as to what weather they should expect, and they make adjustments accordingly. But if out of the blue something comes up and makes the waters really choppy, they don't have control of it, and they just steer the ship the best they can once they're in that situation. Well, it's the same thing with the Federal Reserve. Like, they don't manage government spending. They're not in charge of that. They're in charge of monetary policy. And they have two mandates, and that's it: stable employment, stable prices. They don't want to see really high unemployment, and they actually don't want to see 0% unemployment either. They also probably would like to see inflation about where it is, despite their 2% target. I actually personally think the 2% might be a little bit low, and I think they're actually probably okay with it running 3% or so. And that's the sign of a decent economy. You do want to have some inflation, but raising rates or lowering them because you're anticipating something based on policy and not waiting for the data, why would you do that? That's such a bad idea. On top of the fact that, what if you're wrong and you make these rash decisions based on data that hasn't happened yet because of your presumption of what will happen because of policies put in place? That sounds like such a bad idea to me. Like, really, I can't think of a worse idea if you're the Federal Reserve Chairman. The other reason I say that is, does it really matter if you're late? Like, really, does it matter? If you end up raising or lowering rates 2 or 3 months after the data gives information to support what you think, does that really change what would have happened in the economy if you acted sooner? Let's go back to COVID, when Powell thought that everything was transitory and we weren't going to see the inflation continue to run through things. Now, let's think about that for a second. COVID happens. Nobody expects this. Everybody stops working. There's no more shipping across continents, not, countries, continents. No more trucks going through. Just enough for essentials. Pretty much everything shuts down. So don't you think in that scenario that it's reasonable to think that the higher prices that are coming through because of everything shutting down are something that might only be transitory, because when things open up again, people might go back to work and you'll be able to ship like you used to be able to, and now you'll have enough goods, as opposed to right now when things are kind of crazy and you don't have anybody working. I think it's really reasonable, his thought process. I do think, as a loan officer, that I thought they were really late. I was calling up my clients and saying, hey, I think you should refinance or try to get lower rates, because I thought that was a once in a lifetime opportunity. I really did. I refinanced everything I could. I took money out of anything I was able to. I got unbelievably low rates. We invested that money. I just saw that as something that no matter what happened with COVID, eventually it would end, and being able to get a mortgage at 3% and borrow money against a property seemed like a really good opportunity. A lot less intricate than the things that the Fed are looking at as to what they think the policies need to be. But I did think rates were too low at the time. I also didn't expect the inflation to get out of control the way it did. I did see that housing looked really inexpensive and rates were really low at the same time. It's also why I don't think prices are going to collapse now. I think just because they were an unbelievable bargain back then does not necessarily mean that they're super overpriced currently. It is possible that they've just gotten to where they should have, and since it was such a bargain before, it really looks like they've gotten more expensive than they should be. So it looks like things are outrageously expensive. But I said it in videos a long time ago, inflation is inflation. I would expect the price of a house to go up the same way that a carton of eggs or a thing of soda or whatever it else is that you look at in your life. Just because it's a really expensive purchase doesn't change that. And when you add to the equation that labor has gone up, the cost of materials, the cost of land, the cost to produce, the cost to ship, of course, building homes are more expensive. The price of the homes have to go up. Either way, if they had acted a little bit earlier, I don't think that that changes what we went through. I don't think that means that we were able to stop the inflation before it got out of control. I think supply and demand is supply and demand, and that's what determines the prices of things. And quite honestly, if we go back to 2018 or 2019, I used to sit there shaking my heads when I would look at things at Target or Walmart or some of these other companies where they were selling these things that they couldn't get off the shelves, and think, man, how do they make any money selling it that cheap? And my guess is they weren't. My guess is the margin sucked and they weren't profitable. And it gave an opportunity to get rid of all that junk that didn't sell and start fresh and rerun numbers and get proper margins and have the profits that a company should, which brings us to today. Now, people might be stretched. I've said it 1,000 times. I don't like inflation any more than anybody else. I get sticker shock everywhere we go. We went to Great Wolf Lodge recently, and again, sticker shock. At the same time, the place was jam packed. Like you could barely find a chair at the pool, if any of you are familiar with the place. I don't think it's worth going to. Don't take me the wrong way. But my point is, places are still busy, as expensive as they are. Everybody's complaining. I see the comments in the comment section. Can't survive. We need to have a crash. We need to this. Let me tell you, there is no we need to. Markets are markets are markets. You do not know what they will do day in and day out. There is no way to predict them. Maybe they go higher, maybe they go lower, but there really is no way to know it or be so sure. So when these guys spout their facts and their datas and tell you that the housing market is going to crash or the housing market is going to go straight up, it's why I say do your own research, because they have no idea. Even the guys on CNBC, go look at what they say and follow up and look a few months later and see how those stocks did or didn't do. You know, I make fun of the Nigerian brothers with a buddy of mine because it's funny how, so I understand options pretty well. I've actually thought it would be really cool to do an ETF using a selling strategy of both puts as well as calls, because I think selling cash secured puts is a really good way to get into a stock and a good way to generate return even when you don't own something. And then selling covered calls I also see as a really good way to generate income or money, or increase your revenue on your investments. Either way, we joke about it because they reference the percentage of something versus the dollar amount all the time when they do their analysis to make it sound tricky. Making 90% return on a very small trade because you used options is not that impressive. And flipping to say percentages because you know that 90% return sounds super impressive is just using trickery, as I would call it. You know, when they make a comment that how much better off you are buying a call or selling a put or selling a call or buying a call, and they start talking about the percentages, it's not like they're making the same investment they are if they would have just bought or sold the underlying equity. So what I mean by that is, let's say you're looking at, I don't know, Meta, since they reported earnings today, which was trading at, I think, $540 around the close, okay? So if you wanted to buy 100 shares, you have to put up $54,000. Well, maybe you could have bought an out of the money call for $3 and only put up 300 bucks. And as the stock reported the good earnings and the stock shot up, maybe your call that was $3 went up to $4.50. So you're able to say, I'm up 50%. But you're talking about $150 on one option. And if you had to put up the $54,000 to buy 100 shares of the stock and it went to 580, well, you made $4,000, but you're only up less than 10%. So they changed the percentage and talk about it versus the dollar amount depending on the trade, but it's all nonsense. And it makes it sound so much more impressive than it is. Forgive me. Sorry to insult them. It's just one of the things I've seen that they do on CNBC. And they're really smart guys. And I watch their podcasts and I like what they talk about. But at the same time, I would be careful about the advice and the decisions and the call spreads and the whatever, just simply because it is a little bit of trickery when they talk about it. And then they're able to sell their books. Either way, I still think options are great strategies. Just wanted to point that out. It's one of the things my buddy Steve, I can't say his last name or he'll want a percentage of my conversations, which I make all of, like, I don't know, $2-3 per video. So if he wanted to take 10%, I'd owe him the 20 or 30 cents. And I, I'm more worried that he would put it in a bag and sign my name to it and use it against me in the future. I'm really hoping this is not just a short-term correction where we have a huge bounce, markets draw everybody back in, then the recession comes and you see the stock market collapse. It's that I think we had a big enough correction and enough fear out there that I'm hoping that was a good bottom. Because when I'm looking at markets, it's that I want to be buying from fear. I don't want to be buying from excitement and fear of missing out. I want to be buying from people who are fearful that we're going to go into a recession. Now, it's fair enough, we really might. That's why I want to tell people be really careful. But there was enough panic and enough fear out there that I'm sure people sold their portfolios. And generally, that creates enough panic and volume that a bottom can be made. Now, sometimes these bottoms are made, the markets go back up, but there were real problems that hurt earnings, and potentially the markets could go back down. When I go out and about and I see how busy places are, it's hard for me to believe we're going to go into a real recession, but the fact is that things can change for any reason. Sentiment can change. Consumer confidence was really low, but I guess it could get worse. And when consumer confidence gets low, that means people don't spend as much because they're worried about the economy and they're worried about being able to pay their bills. So maybe they don't go out and buy something. Now, they did manage to go out and buy a bunch of cars before the tariffs kicked in and the prices went up. So I have a feeling you're going to see car sales look pretty good. There might be some other items that people ran out and got. In fact, I bought 3 pair of shoes over it, as stupid as that is. So I got caught on up as well. I'm not trying to judge. I'm not saying anything about anyone, except I am saying something about the guy who, Jerry Abbott, we won't mention names, on YouTube that was mentioning about the Fed, because the way he talked about it was really insulting, and I don't think he's right, especially because some of the things that he was saying contradicted each other. Like, they're going to cut if this happens, and then housing's only going to go up because inflation, and then it's going to go down because it's too expensive. Like, it was just this mishmash of things that wouldn't match up if that were the case. Certain things happen based on things. And so here's one of them. If housing collapses, I could see a scenario where Fed cuts rates. But they've made it very clear that they're going to cover inflation more than they're going to worry about unemployment. Well, what that means is they're more likely to raise rates if inflation gets out of control than anytime soon considering cutting rates. Well, economy would have to really slow them for them to have to consider cutting rates. And if the economy was really slowing and we were going into a recession, it would seem to me that housing prices would come down in that scenario, even if they were cutting rates. I don't see a scenario where the economy's slowing, unemployment's getting out of control, we're seeing prices come down and they cut rates and you see house prices go up when all of these other things are going on. Those two things don't coincide. What coincides is if we have a big recession, you could see house prices drop, you could see the Fed cut rates, but it would take time for that to all play out before prices catch themselves and then go higher, because in that scenario, people are going to be scared. They're not going to be just jumping in because rates are lower. It'll be a different economy. In the meantime, this economy still looks okay, even though we had a big scare. That doesn't mean just jump back into the markets. That means go about what you normally do. If you tend to dollar cost average every month, well, I would stick to that. If you try to time things, well, maybe you wait for a bigger correction. The cash I put on the sideline, I'm perfectly happy with. If we have that huge correction, I'll be in the position to use it. And if not, it'll slowly get used over the next few years anyway. That's what I hope everybody does, that they put themselves in positions that no matter what comes at you, you should be okay. Anyway, I forgot to mention it earlier. If you guys could do me a favor, if you haven't already, hit that subscribe button for me. Sign up for the channel. I know a lot of you aren't signed up already. I would appreciate that. The other thing you could do if you haven't done it is smash that like button. I really appreciate that. That helps YouTube's algorithm. It helps other people find the channel. My God, if you watched all the way through, say something in the comments. That's awesome. Thank you so much. I was going to say something about some sort of joke. I was kind of cooking dinner, but I don't remember what it was. But I promise it was super funny. Anyway, have a great day. Hopefully I have time to get this out tonight. I'll be sure to say something again about something this week. We were out of town. I was going to talk about my summer trip because I'm super excited, and I'm hoping somebody who's been to some of these places may have some suggestions. I will say it very quickly. We're going to go to Tokyo. We're going to go all over China. We're going to go to Thailand for a couple of weeks. And we're also going to go to South Korea for a few days. If anybody has some things that's like, you can't miss this or you should really do that, by all means, make a comment in the comment section. I'm not sure we'll be able to, because especially in China, it's where my wife's from. So I'm sure we're going to be doing a bunch of family stuff too. But if there's something that looks cool, we'll definitely try. Anyway, have a great day, and I'm sure I'll talk to you guys soon. I gotta go get that bird before it like poops in our pool.